Good morning, everyone. Welcome to the London session on TopstepTV. Just going to do a little technical check here because I'm not in my usual spot. So let me know if everybody can see me and if everybody can hear me. So let's see whether my little setup here is working properly. I've got a couple of new screens as well for the traveling setup. Hopefully that's all going to be fine. Let me change screens. Okay. My name is Deeyana Angelo. I've been trading for 17 years, and out of that, I've been trading futures for 12, mainly specializing in crude oil and gold. I see some people are asking whether I caught the crude oil. I don't really get into London guns a-blazing, so I like to take it slow. The worst thing that you can do is to sit at your desk Monday morning, no plan, no review of your mental game, and just start clicking buttons. So I like to do a fair bit of prep, and this will be different for everyone, but I found that the more prepped you are, mainly from that mental side, the better your results will be. At least that's the case for me. Now, the tip of the week for this week is to learn to adapt, and that plays perfectly into that. We did post a disclaimer, I believe, in the chat. So anything that we say here is for educational purposes only. Any sort of trades, position sizes, always follow your own plan. But we are going to start the week by reviewing larger time frames, daily time frames, and then keep drilling it down to see where we are today. So I'm going to start with crude oil. But before we do that, we do have a couple of new segments. Obviously, we have the Past with the Pros, but we're actually adding another segment, which is going to be similar to that, but it's not going to be Past with the Pros. It's going to be Trading with Topstep. So in addition to the existing segment, you will now have the ability to trade with your favorite coach on TopstepTV. So come and trade with the crew. And it's also going to be your chance to ask us trading questions one-on-one, right? So that's pretty cool. We're going to drop a link to that in the chat. I don't know whether I'm going to do that or whether Bruno is going to do that. I can grab it, I suppose. Just give me a second. And then we're going to kick it into the review of the overnight markets and all of the good stuff. Oop, the chat has disappeared. That was great. Yeah, so I am on a different thing. I am in Belgrade. I'm in my mom's house, so I'm not in my London house. And this is her house, and it's her birthday today, so I had to make sure that I was here for her, as always. She is actually turning 77, so it's a big one. All right. Yeah, I have a different camera, obviously not my usual microphone either, so a little bit of an adjustment. It's my travel setup, right? So I do this every few weeks. Okay, looking at crude oil, where we are on the weekly chart, we're in balance, actually. So let me just drop that link that I was talking about. I'm just fiddling around with my laptop here. So that's the Trading with Topstep segment link. If you're interested, make sure that you are clicking on that and signing up if you're interested in coming and trading with a crew. So yeah, balance on the weekly chart. So it's not really telling me much here. I know that I have supplies all the way up and all demands all the way down. So let's keep drilling into the time frames. On the daily chart, we do have some localized supply, but we also have some core resistance areas up at 78, which are, they're pretty far out. but it's within the week's reach, right? So the whole point of doing this is to make sure that we have a good idea where you are chart location wise, and then to sort of do the drill down into lower time frames so that you don't get lost in the really tiny time frames that we like to stare at as intraday traders. And this sort of prevents that. I would also very much focus on your mental side. So if you are coming into Monday and you're not really centering yourself, Hogue always says to stay centered, humble, grateful, and creative. And, that's a very good way to put it. You do need to be grounded, creative, centered, and if you're going to trade from the position of fear and doubt, frustration, anger, those are the kind of results that you're going to end up with. You're going to do stupid things, and you want to review your triggers. When you come to sit during London, everyone's like, did you catch crude oil? And I'm like, no, didn't catch crude oil because I need to do the other stuff that we do before we actually come to trade. There's always movement. Don't be afraid that you're going to miss out on things. Just take it slow down. Less haste, more speed is what I always say. So on the daily chart, like I said, supplies, again, not that much information. We don't have any reversal patterns here yet. We had a selling wick on Friday, but that seems to have been taken out from the overnight views, moves even, views. And I would think that this is still imbalanced. So I'm now on the 4-hour chart, just looking at where we are. This is distributing. It's just sideways movement, right? So again, this is telling me to wait. It's telling me to wait for better trade locations and more data. Anytime you have balanced markets, it's always good to give it time to develop. And remember that I know people are like scalpers and, they all want to do like 1 million trades per day. But keep in mind that the best scalpers in the world, including some of the ones that we have here, they do like 3 to 5 trades per day. They don't do 1 million. And there's a very good reason for it. They look for their setups, they look for their levels, they snipe the level for however many ticks they want, and that's it. So in reality, you only need 1 or 2 trades, right? So you don't need 10. Obviously down to the personal styles, but literally most scalpers that I knew from the electronic trading, not like pit trading, that's a bit of a different exercise, but the ones that are in electronic trading, just randomly clicking buttons, it's not what we can do, right? Because A, we don't have enough size to move the markets any particular way, and we have to follow what the people with the bigger pockets are doing. So immediately, if you're going to be doing 50 trades per day, you're going to put yourself in a slight disadvantaged position, and you don't want that. Right now, we're above the point of control for the volume profile today. So the way I do things, I like to look at the value areas and TPO point of control from the previous day. But I like to look at the volume profile POCs as a potential orientation point. And I do the same for VWAP as well. We're pretty far from overnight VWAP at the moment. So that's good. It means we have some movement and we have some action and volatility. The price is shooting above the Asia high at the moment, so there is a chance of a reversal. However, I do have a level up at 76.21, which is the average daily range high. Now, the difference between average session range high and an average daily range high is that this one only takes in the London session and the shortened London session that doesn't include the overlap. Or it includes the overlap, but it doesn't include the NYMEX Open because it's like different players, different volume, different goals altogether. So by mixing and matching those, I always felt that you are not getting the correct picture, and I call that like data pollution. You have London traders who are generally less crazy, less volume. The movements are not super volatile. And then you have NYMEX traders. They have generally bigger volumes and a lot more erratic movement. But these days both offer you know, opportunities. So I want to see how this average session range high from London behaves. Now, if we ignore that, there could be some scope for further upside. And then I do the pros and cons. So one of the cons against this idea of going with the longs towards the ADR high is the fact that we still don't have single prints anywhere. So the move that is happening right now is not the strongest. You can even see that on these candles here, if I can find my mouse pointer. They're all overlapping each other, right? There's no... it's kind of one time framing higher, yes, but if you kind of drill into a little bit more detail, you will see that this candle, which was the initial balance B period, C period kind of overlaps it quite a lot and then sort of pushes into a high. And then the next period does exactly the same. It sort of tries to go down and then creates some structure, then pushes higher. So while it's kind of crawling upwards, it's not the strongest auction. I know that Hogue likes to grade his auctions, so I would probably give this auction a B score. So it's moving, but it's not the strongest, right? And it could fail. So failed auctions generally are higher probability setups. So I'm going to wait to see what happens around the ASR high. If we manage to glue ourselves away from it, then the next point of interest will be 76.21. I will say that this week I might expect some shorts to step into the market because we've had 1, 2, 3, 4, like literally like 4 days of kind of straight upside movement on the daily chart. So if I show you the daily chart, and if you look at some stats and stuff, it's very rare to have more than about 4 or 5 upside candles in a row. If they carry on going up, then you can look at consecutive bars maximum number and then figure out the timing of maybe a short. But generally, you know, if you look at how crude oil behaves, you don't even need to look at too many stats. It's like 1, 2, then a bit of a sell-off, doji, 1, short, longs, consolidation, short, you know, it doesn't generally go into these like equity type, you know, big zombie rallies that just continue for days on end. So I would expect to see some selling this week, purely on the basis of like, you know, technicals and the fact that they don't generally tend to shoot up like that in a straight line. It would be an oddity. And NFP is out of the way, isn't it? We had that last week. Let me just have a look at some of the economic releases that are waiting for us this week. Of course, I actually got a new laptop, so I had to like set everything up. So today there's not much, right? We have Eurogroup meetings. We have some FOMC speakers. Bowman and Kashkari. And then Tuesday, yeah, not that much. Generally, the second week of the month tends to be a little bit quiet for us over here. Obviously, we have the FOMC meeting minutes, but they're just the minutes, they're not the Fed rate, so that could cause a little bit of movement. Core CPI on Thursday. Okay, that's going to be a big one. All right. And then your core PPI, right? So those two are going to be the main 2 events that they're going to be looking for, especially with trade equities and stuff. So there could be some movement there. Adam says, Dee, I heard that before you traded currencies. Yeah, that was a long time ago though. So my very first thing that I traded was euro dollar for 5 years. So that was from 2008. Maybe even earlier than that, 2007, and then all the way up to 2012. Now, the thing that I don't like about currencies is that when I was trading them, they were moving kind of like they were moving in gold, today in crude oil and gold. So you would have about 150, 180 pips per day. And then I was holding swing positions for, a couple of weeks, and I would get a nice chunk of sort of 500 up to 1,000 pips. And that was nice, right? But then the austerity measures came in 2012. We already had the credit crunch and all of that. But the currencies market still moved a lot. And then what happened is that they all started lowering interest rates. Now, that's a terrible thing for momentum in currencies. And that hasn't really come back. What's happened in the last couple of years is that everybody hiked their rates, but everyone's doing it in tandem. So, UK raises rates, US raises rates, Australia is raising rates. So now everybody's still in that sort of a lock mode where you don't have that great momentum. And the differential between the two countries' currencies that used to drive the momentum and so-called carry trades. So that's the thing that I don't like about them. And every time I look at any currencies, I just go, oh, God, no. So I look for products that move daily. Not like once in a blue moon because the Bank of Japan has a monetary policy statement or they do something with their interest rates. And then the yen goes nuts, right? That's like once in a blue moon thing. So I'm these days probably not the right person to ask about currencies, given that I haven't actively traded them since like 2012. I think the last trades that I did was on like GBP New Zealand dollar in the Forex market. And that was, I think I did a few trades maybe in 2019. But then after that, even that sort of fell below my threshold of acceptable liquidity intraday. And since then, I haven't looked at them much. I think I looked at them the other day when I was talking to someone who is a pound trader. And I just went to see what the average session range is. And I just went, oh God, it's still like locked into like barely like 50 pips per session, So you want to trade something that has momentum and movement. So for me, currencies are extremely frustrating. But I do know that Coach Paul, who is usually on with Coach Jay for At the Buzzer after we do the main broadcast, I know that he trades yen quite a lot. So maybe you can ask Coach Paul, because again, we know a lot, but we don't know everything. And even though I traded euro dollar for many years, and I even traded yen currencies. However, I was always interested in the cross pairs. I never traded yen outright. I always traded euro yen or GBP yen or, something that had that differential and could bring a lot of pips into the movement intraday. Since that disappeared, I'm not really happy trading it. I just go, oh my God, like if I want to trade that, I'm going to go trade bonds because they don't move either on most times. So yeah, but when it comes to like the technicals and stuff, it's still the same thing. It's so slow. That's the only problem that I have with it. These days I do look for slightly slower products, but again, not things that will take 4 hours to give me 10 pips, that's a little bit too much. I would look for, Coach Paul is probably a good person. Is there anybody else? I'm just trying to think. I don't think we really have that many currency traders in Topstep. So yeah, I think Coach Paul would be your best bet. So maybe pop into At the Buzzer tonight after or this evening, depends on where you're located. And then, ask him some questions about how he trades the yen. But when it comes to the technicals, it will be the same thing. You're still looking at levels, you're still looking at options activity, you're still looking at, potentially monetary policies and any sort of big movement that might arise as a result of monetary policy changes, because that's what will drive it mainly. You can look at, volume profiles, you can look at TPO profiles. It also follows the average daily ranges pretty well. That's the same, right? It's a product. It's got price. It's got some movement. So the approach would be very similar. It's just that the expectation of how much movement you'll get out of it is going to be markedly different, especially if you compare it to something more crazy like NASDAQ or YM or something. So it's like, wow. We used to have carry trade yen. That's coming back, but it's not quite as lucrative as it used to be. it's not quite as lucrative. Yeah, so I know that yen has been moving recently. So that's a result of the Bank of Japan changing monetary policy. So I've got to say I've been trading Nikkei. So, you know, I'm still staying away from yen, but I have been trading Nikkei because I think that it brought even more movement than what's happening in the yen. However, they are correlated, right? They are correlated. So keep that in mind. All right, let's see some more questions. How significant is Asia high and Asia low in futures trading? It's very significant. It's very significant. It's the previous session, and we can use it to figure out whether you might have an intraday setup or not. One of the setups that I really like is to look for a takeout of the previous session, high or low. And I'm not talking about doing the same thing that we do with the value areas. I call it taking the New York session and then matching it with New York session. No, I'm talking about London session now, looking at where Asia high was and then looking for a smash through it and a reverse. That's like a stop run liquidity sort of play. And I like to do those a lot, especially if we have some committed movement and a level, right? So I have the average session range high in crude oil here, but let's scan to some other markets as well. You know, we don't have to focus on crude oil. Can have a look at gold, for example. That's my other baby. Again, looking at the weekly chart to start the week. I mean, all-time highs, and then we stopped for the previous week. So now, is this maybe the very early beginning of a pullback? It could be. It could be. Not a very great commitment to the downside though, because we have, what is this, a doji, barely. But it stopped making the all-time highs, so that's something we need to take into consideration. Daily looking very, I call it the phase 3. It's a distribution from Wyckoff. Yeah, so we have a range on a daily chart, which we might be able to use. I can see Hoag's levels here. So we had a weekly kickoff high at 2709. Don't think that's the one for this week. I think that's the one for previous week, because I know that they update that a little bit later when everybody wakes up, because obviously it's the overnight over there at the moment. So yeah, that was, I mean, if he created this last week, this is spot on, man. Yeah, so we'll see what the weekly kickoff levels will be today, but definitely keep an eye out on Hoag's levels, man. They're just, like he says, he uses a combination of things, including chicken bones and and looking at this, yeah, chicken bones indeed. So yeah, I would be erring on the side of caution here because of this range imbalance. Again, it's not, you know, I'm not seeing anything that's like, oh wow, trade me right now. Everything is like caution required. We still have no idea what we're doing here. But we could be failing an auction, I suppose. That's the better thing in crude oil, and sorry, better thing in gold than crude oil. Where is my value area? So let's have a look. We're opening below value. So a failed auction after it didn't get to a gap fill to reach the value area from Friday. That could be a good setup, actually. That could be something I might be interested in. The size of the initial balance is 112 ticks. That's a good range. And this whole failed auction is happening around Friday's COMEX settlement. We already went through Asia high, so again we have that stop run through liquidity. And just let me have a look at the options levels just at a glance to make sure we don't do something silly. Okay, 2680 is where some of the gamma walls are located, and we narrowly missed that, so maybe that could be reached later on, but let's see how this 15-minute chart ends, because that's going to be at the top of the hour. So yeah, value areas are all the way up here at 26.77.9. So we almost got there, but not quite. And now it's failing the auction. So yeah, this could be a short in gold. That looks nice. These are still fairly new XFAs. So again, I don't want to be sizing up too much. So I'm going to stick with 5 micros. The average London session high is at 26.76.4. So that was narrowly missed as well. I would have preferred to see that smacked, but sometimes London is a bit slow, and then what it does, it narrowly misses the average high and then rotates all the way to the other side. So let's wait for 2 minutes. I never like to enter before the candle ends because I'm looking for a specific price action to happen. And if I don't get that because I'm rushing, then what I might end up staring at is a successful auction that tested the initial balance and then went higher. So we don't want that. But in 2 minutes, I may have a short in gold. I'm going to be using a 35 tick stop for this one. But again, if we get buyers at the last minute, which can sometimes happen at the top of the hour and the bottom of the hour, this is going to be a no-go. So it really needs to stay below that initial balance high, which is, let's make crosshair. There it is. So the initial balance high in gold is 26.72.5. So we really need this 30-minute TPO period to end below that. If it doesn't, it's a successful auction, and we're going higher into a gap fill. But yeah, it's potentially a trade. Just a little bit of patience. Yeah, Cedric says, learned something new last week with TopstepTV growler orders. Yeah, that's right. We were on with Keegan on Pass with the Pros. And Hogue jumped in because I was like, you're better off asking Hogue about that. And suddenly you hear the voice of God. You rang. And then he explained what growler orders were. So yeah. But apparently he says that they're nearly impossible to spot. Nearly impossible. So, you know, that's definitely not my expertise. Christopher says, join now. Are you at your parents' house? I'm at my mom's house. Yes, my dad is no longer with us. He's not alive. I remember once you said you're from former Yugoslavia. Yes, I am from Belgrade, Serbia. That's where I was born. However, I've lived in London for, I don't know, like over 20 years now. I moved to London in my 20s, and I'm still living there, but I'm looking to move out of London to West Sussex, which is a nice area, countryside, and all that. So yeah, not my house, my mom's house. Okay, just to clarify this 1000%. All right, so we had some weakness. I don't like the little wick that they got. So this candlestick pattern, you know, if we're gonna just look at patterns, it's called the 3 black crows, right, or something similar. I mean, you have to give a little bit of leeway to intraday because it's a lot more spiky. When you see 3 black candles to the downside, again, follow through might be happening, but let's go down to a low time frame so I can have a look. Let's have a look at a 100 tick chart because that could give us a little bit more feel. I can't really run bookmap right now because I'm kind of scared that it's going to mess something up. So I'm going to take the volume profile on a 100 tick chart as my orientation point. So let's try a short here because we seem to be rejecting volume profile POC. And because I'm doing MGC, I also need to change the chart. And we're not going to be using 100 ticks for stop loss because that's crazy. I'm going to use 35. This is now failed auction at Asia high on gold. And yeah, crude oil is trying to go higher. But my next orientation point is 76.26. Remember that for crude oil, I'm looking more for shorts this week. So this thing is not really matching what I'm seeing on a larger time frame. We're a bit too high up, and we had way too many candles for me to be running longs around these areas. And remember that I look for slightly bigger chunks of the move. So when I get involved, I want to get at least like 70 ticks out of something, maybe even more. Like the trade that I ran on ES on Friday, I got like 168 ticks out of that. And I held it for like 3 hours or something, 3 or 4 hours. So those are the sort of trades that I prefer. I am not a spring chicken anymore, and my brain processing power is a little bit slower these days, I'm going to say. Yarden says, are you looking at ES when you trade gold? I don't. And here's why. Because back in the day, equities and I'm also going to remove all of the monetary values because nothing annoys me more than when I'm trying to trade P&L. And when I'm staring at the P&L, I start doing weird things. So I want to remove all monetary things from my chart and just focus on ticks. Just focus on ticks. There we go. And now all trades, doesn't matter whether you're in 5 micros or 5 full lots or 50 lots, they all look the same. You can have some differences in executions if you're going to run like really big time frames, big lot sizes. God, I need more coffee. Okay, so what I'm looking for in this particular trade now is to rotate through this initial balance that we established and maybe even go into a neutral day, so all the way down to 26.61 would be my target. Now I have a pretty sort of random aggressive target here, but I am going to put my target down to 61. And that would mean a profit of about 102 ticks, which would mean 510 copied across 4, a couple of grand. So let's see how this works. So it's just beginning, you know, it's looking okay for now. It's below point of control on a 100-tick chart. I've noticed those areas are pretty reactive and can be used instead of things like bookmap that maybe complicate things for some people. So it can give you a good sense of movement. But yeah, I don't look at ES, to go back to Yarden's question, I don't look at ES when trading gold unless we have like monetary policy releases that will cause that traditional or risk on, risk off, right? So that's another time when those two assets will negatively correlate, usually. Traditionally, equities and gold used to be negatively correlated nearly all the time. But over the years, that correlation, ever since COVID, that's broken down, right? So it's no longer like that. And in fact, most of the times they would be going together. During COVID, they were going in the same direction, like almost by a factor of 1. And that was, you know, that's Twilight Zone, man. It's like, what is going on? So I can imagine that people who do like traditional portfolio management had to do a lot of head scratching because they were like, why is this happening? And nobody knew because it's like it was a massive geopolitical risk. You know, we had all economies of the world suffering from aftermath of COVID, and yet gold and ES were like, oh, we're buddies, we're going together. It's like, okay. Maybe it's the Bitcoin effect. I don't know. Just put my risk reward tool on here so I can track it. So my entry 26.71.2. And my stop is at 20. 26.74.7. Okay. So what I do, I like to have a separate risk reward tool. It's just a hacked fib tool on my other charting platform. And then I just have a nice gauge of how the trade is doing just purely in relation to risk rewards and the stop size being used. So that is an additional measure to move yourself away from those monetary values and make all trades look the same. How do you change money to ticks again? That's a question. You need to go into settings and then I think it's in charts and data. Yeah, so you go into charts and data and then go chart value display type and then change that to ticks. And then that's gonna make your position display in ticks only. Eekmeek says, my guess is we're stuck in this range until Thursday's CPI report. Yeah, it's possible, you know, it's possible. We'll see. I wouldn't be surprised either. So yeah, but you know, you can have some commodity related movements. So remember, I am mainly a commodities trader. I'm not really a core equities trader. So even if the equities are really slow, you would get a fairly nice movement in gold or crude oil. Why is NQ dumping? I don't know. So let's have a look. Let me just have a look, because sometimes people get a little bit too overzealous with, oh yeah, it's falling, and then I look at it and it's not that lucrative. Let's see, it has extended the initial balance. All right, this looks to me like risk off a little bit because crude oil for some reason is going up. I'm gonna have to check financial juice for this. But yeah, so we've moved. Again, I mean, you know, this is not normal for London for equities to move like this. So let me have a little look-see. We can always have more news from the Middle East, and then that completely changes everything. And if that's the case, then I'll have to bail out of my gold trade. But let's see. Let's see. What have we got? Oh, of course, I'm not logged in on this machine. That's great. Just give me a second. I use financialjuice.com for any kind of real-time news, and most of us do. It is free. Like if you want to get like super real-time news with no seconds of delay, then you do need to pay for it. But for the most part, for what we need, you can just run the free version and you'll be fine. Yes, okay, come on. Okay, so it says need to know market risk. Asian equities rose as stronger than expected US payroll data demonstrated the strength of the world's largest economy and improved investor confidence. Okay, so that's the reason for the Asian markets. Eurozone retail sales year on year have gone down a bit, so that could be another reason. But that shouldn't really affect gold. However, it might affect NQ because of the knock-on effect from like DAX and FTSE. Retail sales are, because we had some euro numbers, right? So I'm just reading those out. Those came out within the expectations. So they forecasted at 0.2. Again, it didn't really grow much. Previous was 0.1%, now it's 0.2%. It's like, whoopee, well done. Eurozone investor morale rebounds in October amid rising expectations. Yeah, I don't know how much stock to put in this. However, traditionally October tends to be a really bad month for equities. September and October generally are not really the months when you might want to be looking for a lot of longs. Because if you look at any kind of statistical platform, you know, we have Edgefield these days, you will see that October is pretty bad performance for equities. So maybe that's what it is. Maybe it's just, you know, the natural flows of the portfolios as people maybe get towards the end of the year. Maybe they want to get some money out for like holidays or whatever. You know, we have Christmas period coming up. We have Halloween. And some people like to get a little bit prepared for those in light of, you know, the family trips, especially Christmas. You know, maybe they don't live in the same state as their family and they have to, you know, book planes and stuff and all that. Dipsam says, hi Dee, could you share some copper levels? Okay, so that's going to take a couple of minutes for me to set that up because I don't actually have copper here. So let me just drag out copper. That is CPE, I think, on CQG. So need to find it first. Because I need, obviously, my charting platform before I'm going to be looking at it. I have all the lovely levels. And copper I haven't traded in a hot minute. Are we December? I think we are December. There it is. Okay. Copper. Just put a template down. Probably can use any of these. Okay, what have we got? Let's move this chart to copper. And then again, same thing, just moving this one. I'm keeping an eye on it on the other machine. Where are we on the weekly chart? I mean, yeah, hit a supply. It's not like the originating supply. We already had some sellers higher up, and then you could call this one a reactionary area. We've now hit that. So is this now a little bit of a downtrend here? Quite possibly. We are in an area of balance at the moment. And having trouble around that weekly point of control. So this could be some shorts potential as well. It leads down to some of these balance areas that are at 425 to 426, let's say. Let's see what we've got on the daily chart. Distribution. So again, another balance which could end up going into a liquidation, right? So that is very, very possible. London opening inside value, creating a neutral day type. Yeah, copper is not going to be the one to trade today. Unless you do scalps from like tops and bottoms of the established ranges, if you can get signs of reversals. Yeah, this is a range-bound day on copper for now, for London. And I'm going to show you what that looks like on a 30-minute chart. And why I'm saying this is a neutral day type and not any kind of a short momentum move. So let's find a little rectangle so I can show you where the initial balance is. So the initial balance is these two white candles. We extended the initial balance higher. Now we're extending lower. That can sometimes kick off a trend, sometimes. But in order to kick off a trend from that to have a breakaway trade, you would really, really need to see single prints. So you would need to see a strong, what do the ICT traders call it? Strong displacement outside of a range that you are referencing. And in this case, it would be the initial balance. So you would need to see the price exit that and close outside of it in order to go, okay, this is now broken away from whatever was going on before, and it's going into a trend, potentially. But until that happens, I would err on the side that this is a neutral day type, we're opening inside value, we are in balance on large time frames, middle of the middle. You know, we need some sort of a catalyst to step in to actually move copper away from these levels. Right now, we don't have it. But if you look at the normal sort of moving averages, you would say, oh, this is a downtrend. But, this is where slightly more detail about the TPO profile and whether we already extended to the opposite side or not. So anytime you extend the initial balance to one side and then you extend to the other side, there's this like force pulling on both ends of an established range of that first hour of trading. And it gets pretty difficult to push outside of it unless you get more volume coming in, usually as a result of a catalyst. So if you're going to take like Coach Jay's approach, that if you are looking for a proper breakaway, you might want to have a look at what sort of volume was done on this particular move outside, and then what sort of a volume was done on this candle, and then conclude that you're going to need more volume than that in order to push outside of it. Okay, so that's where volume analysis from Coach Jay can be extremely useful. So rather than you doing wishful thinking and going, well, we're definitely going outside because it looks short, why don't we actually use the number of contracts traded and transacted at that level and then see how many were needed to keep the price inside, so to basically have less contracts that were not successful at the breakaway, and then how many would be needed in order to push outside to the opposite side when you've already moved, in that direction. So just keep that in mind. Hopefully that helps. All right, so gold is a bit slow right now, just sitting around my entry. But looking at the point of control, we are still below it. So there's a 100-tick chart where I'm just waiting to see what they want to do with this. However, we have failed the auction, so that is going in our favor, and we took out the Asia high. So we'll see. Usually these moves, sometimes on gold, they don't even start until like another hour or two. So basically the closer you get to COMEX, that's when you're going to start seeing some committed movement. But yeah, they tried to get outside of initial balance. They went over Asia high and they sold off. So that's the only thing that I have at the moment. Everything else would be wishful thinking. I'm just following price action and sticking to it, sticking to the plan. This is what a 30-minute chart looks like, so that we're not on a super low time frame. So potential for a 3-bar reversal, it could be early as well, but we're trying, it's trying to distribute and it's trying to reverse. So for now, there's not really much for me to do here. If it goes above the initial balance high, I would also need to see it close above the initial balance high, because right now it's just a distribution. So price heading towards the high, the open and close of the previous two candles. So the close of the first one, open of the second one. That's just going to be balanced. That doesn't tell me anything new. So I need to be patient here. And, it's a small amount of cash. Again, like I said, it's still a new XFAs. So using a small amount of contracts Monday. So yeah. So I'm just going to leave that to do whatever it does. And, accept the loss at the end of the day, right? Here we go with the crystal balls. Gold will take the current high and then all the previous low and then go up. Okay, so let's talk about conjecture, because I see that a lot. Conjecture is when you try to figure out what's going to happen more than one step ahead. You don't know that, okay? So first of all, the only thing that we know is that we are taking out the Asia high, so something that's already happened, right? And we know that we're at Asia high that was currently unsuccessful. That's the only thing you know. Will this high get taken out? Yes, that's a possibility. So that's step one. Anything after that, whether it continues to go high and then make another all-time high, whether it reverses and then takes out the low, I'm sorry, but you cannot know that. Nobody knows that. And after 17 years of staring at the markets day after day, I know that there are only maybe step one and step two that you can possibly hypothesize. Everything apart from there is a total waste of energy, okay? We don't know how far this is going to go, even if it goes lower. I don't know whether it's going to go all the way to the other side of value. We have a very strong uptrend, right? Sorry, the other side of initial balance, more accurately. You don't know that, right? So whenever people start telling me the crystal ball side of things, I'm always just like, yeah, just you wait. Yeah, it will happen. You'll learn. And here we go. His analysis is 80% right. He has 75 win rate in gold. Awesome. So do I. Okay. My overall profitability on everything that I trade, and mind you, I trade 6 things. I trade Nikkei, I trade crude oil, I trade gold, but gold and crude oil actually have the highest probabilities and hit rate for my setups. So my gold actually setups are around 82% most of the time. My gold setups are usually around 77%. And then some of the other things that I don't trade that often is what drags the profitability a little bit lower, like ES and stuff, because I'm not a core equities trader. However, I've been trading gold for a very long time. This is a failed auction. Generally around this time of day, it turns around. But how far it's going to get to, whether it's going to take out the low, which is pretty high, pretty low down, at 26.59, if that's what you're talking about. Nobody knows that. No, you don't know. I'm sorry, but you don't know how far this is going to get to. You can have a supposition. You can have a supposition, but anything apart from that, when you start going, it's going to go to moving average, then it's going to get down to the demand level, then it's going to go down. Nobody knows, okay? No one knows that, okay? Yeah, and also because, yeah, here we go. Back in your face. I love your username says gold is in the middle of range. Exactly. Anytime it's in the middle of the range, it makes it even more difficult to figure out what's going to happen, because when anything is imbalanced and in the middle of the range, the probabilities of any setup will diminish, right? There are things that we can use on an intraday level to surmise that maybe this is more likely, and that's what I've done here. However, whenever you're in range, immediately it's like 50-50. It could go up, could go down, right? But when you're at the extremes, then things become a little bit clearer. So if you have an obvious high, obvious low, Asia high, Asia low, right? That is an extreme of some sort, because it means they stopped there for some reason. You don't need to know why they stopped there, but for some reason, Asia turned around. You know, Asia high was for some reason at 26.73.4. But when London kicks off, because they have more volume, there will always be a stop run through those areas, or nearly always. So that's the thing that we can put, our money on. It's like, yeah, that happens a lot because of the market mechanics, right? You have more volume in the session, you have more things happening, and naturally the levels from Asia might be reactive, but we might run through them, primarily because there's more people there, right? More people trading London gold than they trade in Asia, maybe, So that's the idea. And seeing that, London and Tokyo, or London and Asia in general, they're not too far off when it comes to the average range that they traverse, but Asia is still a little bit lower, right? It's still lower. And that tells a story of volume as well. So, but yeah, so that kind of crystal ball analysis, I'm really not in favor of. When you go, it's going to touch 26.77s, and then it's going to go down to 26.68, and then it's going to turn around from there to reach 2700. It's like, Cool. Great story, bro. And then you watch it, and you watch traders with those sorts of analysis try to express their views, and they get absolutely slaughtered because they have a huge bias of what step 1, step 2, step 3, and then the market doesn't do that, and they get themselves into trouble. So, you know, if it works for you, it's fine. You do you, man. Okay, so all the best to you as always. But I personally don't like going that far out. So I call that step 1, step 2, step 3 with conjecture. So we can figure out step 1 and maybe step 2, but step 3, 4, 5, 6, 7, 8, you know, that's going a little bit too wishful thinking, unfortunately. But yeah, again, all the best to you. If it works for you, man, just, you know, all the power, right? Yeah, NQ is going lower. I don't trade NQ, especially not during London, right? All right, we have 3 more minutes. Yeah, too far in time as well. Exactly. The further out in time that you're planning things out, the less likely it is that that's going to be happening. Yeah. So let's move on from that. Okay, let's have a look at, I did want to have a look at Nikkei for a second too. Just because I might be interested in getting into some swing trades and stuff. So let's have a look at what that looks like from a very large time frame. And then we're going to finish it up. And then I'm going to go have a day with my mom to spend her 77th birthday. Can't believe she's 77. It's mad. All right, so they took it back up, but now we're still, this is a weekly chart, so very, very large, just to see where we are. In the middle of the range again. I don't like this. Okay, so this could be, again, distributing. I would want to see what they do tonight with Nikkei, because that might offer maybe some more upside. Because if we take that, we smacked through the high of the previous leg, and now we're testing that. So maybe that could be a springboard for further upside. I would need to look at some options levels for tomorrow as well, just to find some confluence. But yeah, for now, this looks like it might have more upside in it. Not during London today. This is also going into a bit of a short. And following NQ, so it's following equities. We're below the 30-minute point of control of volume. We're below VWAP. This is a strong move. So yeah, equities. So just be careful of equities during the New York session, because anytime you have a very lively London session, the New York session is really shit. There's just one word of warning, because I noticed this trend in commodities as well. If London is super lively and you're trying to, you get to the train station and wow, we already moved overnight, and then you're waiting for fireworks that we normally get for the New York Stock Exchange, and suddenly it's just like range bound, wicks everywhere. So it's like, so yeah, just that's something that I've noticed. So be careful. Don't jump into any directional moves unless you confirm them with like 3 different data points, not people, but data points. And yeah, remember that it's Monday. We also don't want to be digging huge holes. And it's going to be much easier for you. Is there any news? Because I'm getting some flickering from gold here. No, nothing. Yeah, there is a little bit of negative bias, obviously, in equities. But it's not exactly translating into gold just yet. It's like crude oil is reacting. However, if it's a true risk-off day where equities go down, commodities go up, gold should also react. And I'm not really seeing that across the board. So I don't know whether they're maybe still asleep or hungover from the weekend or something. But so far, the risk-off is not it's not across the board, so it's not really a risk-off day yet. But yeah, as always, keep an eye on financial juice just in case we get some Middle East news. That's, that remains a headline risk for today, definitely. And let me just finish some plugs for you guys. Okay, so if you're liking what we're doing here, remember that it would mean a lot to us to leave a review on Trustpilot, right? So if you're really liking the Topstep experience, if you're liking the VIP rooms, if you're liking the broadcast, if you're liking anything that we're doing here, then please leave us a review on Trustpilot. Okay, there we go. Nicholas says, nasty pump on oil. I would say it's a beautiful pump on oil, because if we go up, at some point, we are going to slow down. That's how oil works. And then we might have a very, very nice extended move with plenty of profit margin to play around with. Yeah. Jason Thompson says, do you use 7 to 8 a.m. GMT for the DAX? No, I actually use 8 a.m. till 9 a.m. as well, because Eurex is a very small exchange. So it's like, London starts and everything starts moving. I trade the DAX every day, yeah. Well, not on Topstep, obviously, but yeah, I do trade it in my own company account. And it's been something that I've traded for 6 years now, so not as long as some of the other things that I've been looking at. Sarah Lucas says, beautiful pump holding from 65.2. Excellent. That's a very nice trade. Say hi to your dogs, by the way. I don't have dogs today, so it's all super eerily quiet. Yeah. Okay, so if you are looking for trading buddies, and if you are looking to get involved even more in the community, you're here chatting, we are analyzing the markets, but if you want to go further than that, you may want to check out Topstep Discord, because all of our coaches are in there, and you need to get in there and just find some trading buddies, get involved in the community a little bit more. I'm going to post that as well. And then I will be gone to go spend the day with my mom. But before I go, don't forget we have at the buzzer, new segment relatively, with Coach Jay and Coach Paul as well. So somebody asked about the yen. Coach Paul is your man. He is the one who trades a lot of the currencies. That usually happens after the main broadcast at 3:15 Central. So right after we finish, Coach Jay and Coach Paul do their thing. I will also be having Coach Ray this Thursday as my co-host, and that is going to be on a semi-permanent basis. So Coach Ray, if you're a fan of Coach Ray, he's an excellent coach. I've known him for many years now. He came to me for some coaching himself, and then he became a coach, in his own right. And it was absolutely lovely to see him mold my method into his style. And now he is one of the Topstep lovely coaches in here as well. So he's going to be joining me on Thursdays going forward for the first half hour of the segment. So we're going to be analyzing the markets, trading live, and you will get a chance to ask us all sorts of questions as usual. So check that out coming this Thursday. In the meantime, enjoy the main broadcast. Like I said, check out the Coach Jay's segment at the buzzer as well. And yeah, I will see you tomorrow for another London session. And then I'm back to London because I'm staying here for another day. So yeah, back to normality from Wednesday. In the meantime, trade safe. Don't dig a huge hole on Mondays if you can help it. And that's it. This has been TopstepTV. I'm Deeyana Angelo. I will see you tomorrow. Take care.